This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil with Invest Like a Pro. So I had a request to go a little bit more detail into contraction and compression patterns. And I want to make sure that I describe a distinction here. There's a big difference between contraction and compression. And so I'm going to go through that today. One of the things I want to mention is that I'm putting together I mentioned last week that I have a course for $100 a year that's goes along with the book, and right now it's a foundations course that I have on there with hundreds of videos that basically go into a lot more there's a significant amount of detail over and above the book, and I think it'll help you understand the book, as a few of the subscribers have already mentioned. Now, the reason why I'm mentioning that today is that there's another part of the course that's going to be included in the 100 a year, which is a compression-based swing trading approach. I haven't put that in yet because I want to make sure that people go through the foundations course first, which I recommend, because I think it will really add value even if you're looking to do just the compression-based swing trading. You need a foundation to start, and then you can expand from there, so to speak. If you're looking to do more swing trading oriented ideas. But I want to give you some ideas with respect to the difference between contraction and compression today. So let's go ahead and get into this. So I'm using the Qualcomm weekly chart, and I wanted to show how the market and stocks go through periods of contraction and expansion. Okay, this is what I'm talking about when I'm looking at the ADX and the DI lines. So you can see where red DI is kind of in an expansion phase versus the green DI, where these lines are going apart, right? And then they reach a peak and they start to contract, meaning they start to come together. And during this period, we've got we've essentially starting here, we start to contract, and it's essentially another word for consolidate. So during these periods, the market is trending, and during these periods, the market is consolidating. So you got to understand the natural nature of a stock and the way that it plays in either direction, which is you can move up, you can consolidate, you could go down, consolidate, then you can go back up, consolidate, and then go up again and consolidate, right? So this is expansion and contraction. These are contraction phases, okay? This is contraction. So expansion is when we're moving in a direction with some speed. And then contraction is when we're consolidating, not making a lot of movement. There's a lot of price bar overlap. There's a lot of overlap in the bars, and that's causing these to consolidate because we're not making really strong moves in either direction where the price is progressing higher or progressing lower. All right, so I want to make sure you understand that, number one. That's contraction. When it comes to compression, that's a different animal. What we're talking about there is we could be in an expansion phase. So in this is an expansion phase to the downside here, but we have compression taking place here with the idea of an inside bar. This bar is inside this bar, and it's one of the smallest bars going back. This is another example of compression after a big move. Or we consolidate, we make a move to the downside, and we get compression with tiny bars, and then we consolidate, and we get another tiny bar and another tiny bar, and then expansion follows. So compression followed by explosive movement. Okay, I'll call it a little different than expansion because contraction and expansion are what we're talking about here. This is an expansion phase, and this is a contraction phase. So what I'm looking for is actually compression in an expansion phase. Okay, that's that's essentially what I'm trying to find. Now, in the course, I go into a lot of detail on how to go about doing that and the different ways that we can identify that, especially in multiple time frames. But even more important than that is really identifying ways to take advantage of it, know when it's about to end, and then also knowing how to take profits. It's just too much information to give in a single 10-minute video. But just look at it this way. We have a reversal pattern developing here, and then look at this compression pattern sitting right above the 18 or right here, these tiny little bars. Or if we get going to the upside and we go through a pause phase, catch up to the 18, and then we get a tiny little bar. Look what follows. And then after a big move, we get a contraction bar, and that's really the start of a consolidation phase. But what I'm really looking for is this pattern where we've got 18 and 40 working together, and then we get some form of a compression pattern. So I'm looking for direction, and then I'm looking for ways to take advantage of that. Now, it can come in different ways. So we can have, and I'm showing you how, in a swing trading basis, how I would go about using it in the direction of the trend. But there are other ways where you could be working your way down and really trending to the downside and then get compression here. And that could be the beginning of a retracement, a counter trend move. And the same thing holds true at the top. So, I mean, I think all of these things you want to be taken into account. Let me just show you. So I've got this is Boeing on a daily chart. And it shows some different periods. So on TC2000, I can color code the bars. And so the red bars are NR7 bars. Okay, and I'm always on the lookout for those. So it's kind of funny when I go through and look at the individual charts. Now, I took the 18 and the 40 off here. I'm not trying to say that they're not important. They're definitely important into what I'm doing. But when I want to zero in and kind of look for this compression pattern, I'm pretty focused in on the bar. I'm focused in on the price pattern preceding the bar, and I'm looking at the 4, right? I'm just kind of trying to focus in on all those things and get an idea of, okay, I know the trend is up. If I had an 18 here, I'd have an 18 rising underneath. But I kind of want to see what's taking place. We had a big bar to the downside that had no follow through, inside bar. And now we've just been kind of going side. So we've got all these bars are taking place inside this bar, and then we get an NR7 bar. I actually love the idea on an NR7 bar that it gaps down and takes out the low of this bar before taking off to the upside. So anyway, these are different ways that I think you can use this compression approach and ways to think about it, especially if you show compression on one time frame and then you're also showing compression on another time frame. So as you notice, if I scroll back on this chart, you can see that they can happen during the trend to the downside, and then at the reversal point, even right at the low. And then as we break the downtrend line and start to show signs of reversal, they can show up. Now, there can be volatility around these things, and that's why I have to kind of give a lot of detail into how to go about taking advantage of them in a way that would be safe, so you're not getting whipped around. You're not just taking the north side. So what I used to do is I'd have an NR7 bar, and if it took out the high of that, oh, I want to get long. Or I have an NR7 bar, I take out the low of that, I want to get short. And I just found I got whipped around a lot. So I created some strategies around that to be able to take advantage of what to look for and what to do. But just suffice it to say that if you know the bigger trend and then you get a compression pattern to develop and you have it in the direction of the 4, then it's something that's definitely worth monitoring. Okay, so hopefully this helps. Go ahead and post any questions or comments, and you can, and we'll see you next time.